Welcome to This Explainer. Look, if you're a business owner or you're just learning the ropes of bookkeeping, you definitely know that familiar feeling of dread. You know the one. You open up your software, stare at the screen totally packed with raw accounting data and endless rows of numbers, and you're just wondering how on earth to make sense of it all. It can literally feel like trying to read a foreign language. But today, our goal is super simple. We're going to transform those financial reports from a confusing, stressful data entry chore into a crystal clear business dashboard, one you can actually use to steer your company.
So, are you actually making money? It sounds like such a simple question, right? But it is absolutely the most critical question every single business owner faces. Because when you're caught up in the day-to-day grind, serving customers, managing your team, ordering supplies, it is incredibly easy to lose sight of the big financial picture. You might log into your bank app, see 10 grand sitting in checking, and think, hey, we just had a fantastic month. But as you'll see, that balance doesn't always tell the whole truth. The good news here is that you don't need an accounting degree to find the real answer. You just need to know how to read your dashboard gauges.
Okay, let's take a quick look at our roadmap for today. We're going to cover 4 key areas: the P&L scoreboard, the balance sheet snapshot, how to investigate the details when things look off, and finally, how to avoid the old garbage in, garbage out trap.
Let's kick things off with Section 1, the P&L scoreboard. This is all about understanding the profit and loss statement.
This is your first major dashboard gauge. Now, you might hear this called the P&L or the income statement, but it's all the same thing. I like to think of the P&L as a video recording of your business. It captures everything that happened over a specific flowing period of time. So let's say we're looking at the month of October for a local landscaping business. On the left side of the scale, you've got your income. Literally every dollar customers paid you for mowing lawns and planting trees that month. And on the right side, you've got the expenses required to keep the lights on. We're talking fuel for the mowers, employee payroll, equipment maintenance, that sort of thing. The P&L is just a direct head-to-head comparison between what came in and what went out during that specific video recording of October.
And the entire point of this statement comes down to the bottom line: net profit or net loss. It's the final result of a really basic calculation. You just take your total income and subtract your total expenses. So if your landscaping income for October was $50,000 and your operating expenses were $40,000, your bottom line is a positive $10,000 net profit. You earned more than you spent. You won the game this month. But say a few things broke down and expenses crept up to $60,000. Well, now you're looking at a $10,000 net loss because your expenses outpaced your income.
All right, moving right along to Section 2, the balance sheet snapshot, which is how we understand your true financial position.
Remember how we said the P&L is like a video recording? Well, the balance sheet is a static photograph. It's taken on one single, specific date. It tells you your company's exact financial position at a frozen moment in time, like exactly 11:59 p.m. on December 31st. And this whole report is built around one core accounting equation. Now, I know it looks a bit like a high school math formula, but it's actually just plain English. Assets equal liabilities plus equity. In normal, everyday terms, this simply means what your business owns is equal to what your business owes plus what is truly yours, the owner's share. When you break it down into these 3 categories, you can instantly see the total financial health of the business on that exact day. The asset slice is everything of value your business owns: your bank account balances, the money customers still owe you, and physical equipment. The liability slice represents what you owe to other people, so credit card balances, small business loans, and unpaid vendor bills. And then there's the equity slice. This one trips up a lot of beginners. But think of it like this: if you were to sell off every single asset your business owns today, and you took that cash to pay off every single liability, whatever cash is left over sitting on the table, that's your equity. It's your actual true stake in the business.
Okay, pay attention, because we've arrived at the most important lesson of all. This is the biggest trap for beginners, and I want you to burn this into your memory. Profit does not equal cash in the bank. Seriously. Let's go back to our landscaping business. You run your P&L video recording for the year, and it shows a massive $50,000 net profit. You're absolutely thrilled, right? So you open your banking app to look at all that cash, and the account is practically empty. Panic sets in. Where did the money go? Well, let's say halfway through the year, you took that cash and bought a brand new $50,000 tractor outright. That tractor purchase doesn't show up as a standard expense on the P&L. Instead, it becomes a physical asset on your balance sheet photograph, so suddenly you are highly profitable on paper, but your actual piggy bank is completely empty.
Looking at this side-by-side comparison, it perfectly shows why you absolutely need both reports to get the full story of your business's health. The P&L tells you if your daily operations are actually making money over time, while the balance sheet tells you if your business is standing on solid financial ground today. Relying on just one of these reports is exactly like trying to drive down the highway with half your car's dashboard covered in duct tape. You need both the speedometer and the gas gauge to get to your destination safely.
Which brings us to Section 3, investigating the details using the Transaction Detail Report.
So, what happens when you look at your dashboard and one of the gauges looks completely wrong? That's when you have to lift the hood and see what's broken inside the engine. Let's say you run your P&L and you notice your office supplies expense is sitting at $4,000 for a single month. That seems absurdly high, right? Well, by clicking right on that weird total, you generate a transaction detail report. Think of this report as your magnifying glass. It lists out every exact individual receipt, date, and vendor that adds up to that $4,000 total. Scanning through, you might quickly discover that someone accidentally categorized a new laptop purchase under office supplies instead of computer equipment. Boom! It's literally the perfect tool to hunt down mistakes and get your gauges reading correctly again.
And that leads right into our final section, Section 4, avoiding garbage in and ensuring accuracy for tax time.
Look, before you confidently hand your reports off to your tax pro, you really have to remember the golden rule of all software: garbage in, garbage out. QuickBooks simply organizes the data you feed it. Just hitting Generate Report doesn't mean the numbers are actually right. For instance, if you forget to reconcile your bank accounts first, you might literally be missing thousands of dollars in expenses. Or maybe you spot a negative balance on your balance sheet. That is a massive red flag. I mean, you can't physically have negative cash in a real bank account. So a negative balance usually means you've duplicated an expense or completely missed recording a deposit. You've got to investigate and fix these common bookkeeping errors, otherwise your dashboard is just lying to you right when tax time rolls around.
Now, as you get more comfortable reading your dashboard, you'll see that QuickBooks offers dozens of other reports. You've got things like the Accounts Receivable Aging Report, which is a total game changer for cash flow, because it tells you exactly who owes you money and how far past due they are. Or the Statement of Cash Flows, tracking every dollar moving in and out. But hey, don't let this list overwhelm you. You absolutely do not need to master every single report today. Start by building a solid foundation with your core dashboard. Just really get to know your income, expenses, assets, liabilities, and equity.
So now that you know how to read these critical gauges and you deeply understand that profit does not automatically mean cash in the bank, I want to leave you with this final thought. Take a look at your own reports today. Go ahead and lift the hood, use your magnifying glass to investigate those details, and ask yourself, are my books actually telling the truth, and are they truly ready to guide my next big business decision?